Hello, everyone. Good evening and welcome to Suffolk Credit Union's first time home buyer webinar. My name is Rick Krompinter. I am the AVP of the mortgage department here at Suffolk Credit Union. To our current members of the credit union, thank you for joining us. Thank you for your continued support of the credit union. And for any non-members, a warm welcome to you as well. A little bit about the credit union. Suffolk has been serving our community for over 57 years. We have 10 locations and we serve over 70,000 members. Membership is open to those who live, work, volunteer, conduct business, and worship on Long Island. Some housekeeping. We'll be recording tonight's webinar, so therefore all attendees are muted. Feel free to ask questions throughout the presentation. You can use the question feature in the webinar. We'll attempt to address our questions during and at the end of the webinar as time allows. Any questions we're unable to get to tonight, we will respond via email within a day or so. Our presenter this evening is Lori Mortensen. Lori is a mortgage loan officer here at Suffolk Credit Union. She is our mortgage product expert. She's been instrumental in helping many people reach their dream of home ownership. Lori is accompanied by two guest speakers, two real estate professionals with her, Amari Hernandez and Carol Rodriguez from List to Sell Realty, based out of Islandia, New York. They'll provide valuable insight to home buying process and will assist in answering any questions you may have as well. So with that, Lori, if you're ready, you have the floor.
Sure, thanks, Rick. So hi, everyone. Thanks for joining tonight. As Rick said, my name is Lori Mortensen, and I'm a mortgage loan originator here at Suffolk. I've been with Suffolk Credit Union about 5 years, and in the mortgage industry, a little over 25 years. And I do have Amari and Carol here tonight. I'm going to let them say hello in just a moment. During the presentation, we're going to post some interactive questions. We'd love for you to answer them so we can get a feel for how far along in the home buying process you're at and your current knowledge. So with that, Amari and Carol, if you just want to say hello, and then we'll get right down to business.
Hi, how are you? I'm Carol Rodriguez. I'm a real estate broker for List to Sell, a fully bilingual Spanish and English real estate office here in Long Island. Pleasure to be with you.
And Amari Hernandez, I'm a licensed real estate agent with List to Sell as well, and bilingual as well, and happy to be here as well.
Great. Thanks, guys. Okay. So, do we have a poll right off the bat, Greg? Let's see. Okay, I'm not sure if we have the poll ready yet, but some things we're going to talk about tonight. Are you financially prepared to buy a home? Do you understand the lending criteria necessary to purchase a home? And what do you need to know prior to closing? So today's agenda, again, how much can you afford? How much of a house can you afford? How much of a loan amount will you qualify for? How much money do you need for the transaction? The difference between a pre-qualification and a pre-approval, shopping for your home and the loan, the closing procedures, and we're going to leave you with some very helpful resources. Okay. So the big question on everyone's mind, how much can I afford? When you apply for a loan, the lender is going to want to see your financial scenario to look something like this. So this is just a guide, okay? The house, that's not your only expense. You know, once you buy a house, we want to lend you money and know that not only can you afford your mortgage payment, but will you still be able to save for the future? You know, you're going to have other living expenses. So a ratio that underwriting likes to see is for your housing ratio. So just your mortgage payment with homeowners insurance, property taxes included, to be about 35% of your gross monthly income. Okay. With the housing expense, the other main item that underwriting is going to look at is the debt reporting on your credit report. Student loans, automobile loans, any credit card loans. So if you see in the pie, that's the debt, 10%, the dark blue there. So to be in good shape to apply for the loan for your mortgage, underwriting is going to want to see a total debt to income ratio of your debt and your housing about 45% of your gross monthly income. Okay, so again, that's to make sure that you have money left over for those living expenses, savings, and transportation. Okay, and if it seems like we're jumping around a little bit at the beginning, you know, I am, because I want to give you the overall picture, and then we're going to drill down into the specifics of each component. Okay, so down payment. Everyone wants to know, how much money do I need to get into a house? How much do I need to save? So that is the first portion of buying a house, is saving that down payment. Housing prices the way they are on Long Island, you know, a very common misconception is that you need at least a 20% down payment to buy a house. So first-time home buyers, that's near impossible. The good news is that you only need 3%. A 3% down payment can get you into a home. Okay, so when I say 3%, I mean 3% of the purchase price. So on a $400,000 home, minimum down payment, $12,000. Okay. You're also going, and earnest money, that's, you know, that's a little bit technical. That's really part of your down payment. The earnest money is what you're going to be giving to the attorneys once you find a house and go to contract. But for tonight, you just need to know your down payment, and then you're going to need money for closing costs. So that's the other big one. We're going to dive into that a little bit later. But depending on your property taxes, closing can range, you know, anywhere from $15,000 to $25,000, and we'll get into that a little bit later. Most of the loans that we do at Suffolk Credit Union, all of our mortgages are conventional mortgages. So in most cases, we don't need to document what we call reserves, money left over after the purchase, after closing. But of course, we don't want to leave you penniless when you get into the new house. So, you know, we'd like to see you have at least 2 months savings post-closing. Okay, and another reason for those 2 months reserves, aside from that mortgage payment, you're going to have your homeowner's insurance, property taxes, commuting costs. You know, that new house that you're buying, that may be, you know, another 30 miles further than your current home. So are you now going to have, you know, a train fare or tolls, parking, and of course, home maintenance? And Carol and Amari will talk more, you know, more about whether you're going to go into a move-in ready house, but you can definitely count on having some level of maintenance, or, you know, wanting to put in some new landscaping when you buy that new home. So we know that you need at least 3% to purchase the house. How are you going to get there? I don't. You know, some of you may already have a chunk in the bank and you're ready to come in and see me tomorrow and say, I want to apply for the mortgage. I'm going to go out and start shopping. Some of you may just have, you know, graduated college and are thinking about buying a house in the next 1 to 2 years. So how are you going to get there? How are you going to save for that down payment? You want to set yourself up with some goals. And whenever we talk about goals, we want them to be what we consider SMART goals. So if you look at that acronym and you think specific, how much money am I going to save each month? $100, $500? It should be a measurable goal. So if you're not already a member at Suffolk Credit Union, I encourage you to open up one of our memberships, a savings account. This way, your deposits each month when you're saving, you can measure them. So you'll see that bank statement come each month. Yep, I did it. I put $500 in this month. Attainable. Can I attainable and realistic go hand in hand, but can I get to this goal with the amount that I've earmarked to save? So by saving $500 a month, can I reach that goal of, you know, a 5% down payment? And realistic. If I say I'm going to save $500 a month, is it realistic for me to do that? You know, can I pass by the Starbucks every day? Can I pass McDonald's without stopping on the way home? You know, you want to set a goal that's realistic to you. And then, of course, timely. So again, if I'm saving $500 a month and I want to buy a house in 6 months, you know, that's not a timely goal, or I need to up that specific goal of how much I'm going to save each month. So we have a little budgeting worksheet for you all. Of course, you registered with your email addresses. Just reach out to me. We can email you this nice budgeting worksheet. You know, you could see how much each month you're allowing for each of these categories. Okay, so I want you to put everything in there, your gas, electricity, your cell phone, really get an idea of how much each month your expenses are. And that's so important, you know, because if you don't know what your expenses are, if you don't know what you're spending money on, how are you going to save money? Okay, so the budgeting worksheet, reach out, we'll send that to you. But of course, Suffolk has all these great tools within our membership accounts. So, you know, open up that savings account. In online banking, you'll see each expense that you make with your debit card, there's a category that you can assign to it. So you go and you get gas off your debit card, you get home that night, you can tag that to, you know, automobile and, you know, auto and transportation expenses. So use the tools that we have to help you. Along with that, in our mortgage section on the website, we have a mortgage calculator. So I'm not going to, you know, bore you with putting up a visual on that, but I'm going to get into more about the loan amounts and, you know, qualifying. But going back to, you know, the pie chart that we had up a few minutes ago, total housing expense, total debt. So, you know, play around with trying to figure out what you're comfortable with by plugging in a loan amount, putting in the prevailing interest rate. You can get that right off the website, and it will tell you what the monthly payment is based on the loan amount. You know, so this way, when you come sit down with us, we can guide you with what you'll qualify for, but also with how much you're comfortable spending each month. Okay. So check out the mortgage calculator. That'll be a big help to you. So you've saved some money for your down payment. You know your monthly budget. You know what what you want to spend. Now the question is, will you be approved for this mortgage? These are the basic underwriting criteria. So the first thing that when you put in your loan application with me and we send it over to the underwriter, they are going to look at, does this person have stable monthly income? Stable monthly income, when we think about that, underwriting is going to want to see that you have 2 years of employment in the same line of work. That doesn't mean it has to be at the same job, but have you been doing the same thing for the last 2 years? Of course, there's exceptions to all these rules. So, you know, what if you just graduated college a year and a half ago and you got your dream job and you've been on the job for a year? In most cases, we can use that college experience and that time in college towards the 2-year employment requirement. Okay. Adequacy of income. So not only have you, you know, the question is, have you been on the job for 2 years, but can we document that? So all income that we use needs to be on the books and documented. So we're going to collect from you your last 2 years W-2s. We're going to take anywhere from 2 weeks to 4 weeks worth of pay stubs, usually 1 month of recent pay stubs. And then if you're self-employed, 2 years of business and personal tax returns. These are the minimum things that we would require, the minimum documentation. You know, if you're self-employed, there's going to be other documents that we're going to need. Okay, oops, let's go back. And then sufficient funds to close. In order to make sure that you're going to come to the closing and be ready to close on the house, we want to document that you have that money ready and available and liquid in the bank. So we're going to take 2 months of bank statements to show the underwriter, yes, we have that money, we're ready to go. And then the final one is a big one, your FICO score and your credit worthiness. Is there a minimum credit score? That's, you know, a big question that most first-time home buyers ask. We don't like to say that there's a minimum required. When we talk later on about PMI, I will let you know that in order for the loan to have PMI, you would want to have at least a 620 credit score. So if I could, you know, leave you with one thing tonight is that we want to get your credit in the best shape possible so that when we're ready to run the credit, it's at its best. Okay, so a 620 credit so that you'll be eligible for PMI. An average credit score is about 680. So I would like for you to strive to have at least a 680 credit score. And then to get the best rate, you really want to be in the 700s. Okay. How is FICO calculated? Everyone always says, you know, why is my FICO where it is? Why can't I get my FICO up? What am I doing wrong? Or they'll come in and say, I have a great score, I'm in the 800s, and, you know, be proud of that. You know, that's a major component to buying a house. So while, again, this is just a guide, you know, we don't work for FICO. We can't tell you exactly where, you know, how they came up with your score, which is ever changing. Of course, your score is different month to month based on your credit activity. But this is a very good guide to how your FICO is where it is. And you can see from the chart, payment history, 35%. So that is, you know, your previous payments to your creditors. Have you made your payments on time when they were due for, you know, the last 3 to 5 years? The next big criteria is your credit utilization. The FICO people like to see that at about 30% usage. So for example, if you have a credit card with a $10,000 limit, you know, is your balance at around $3,000? So that would be a credit usage of about 30% on that card. So again, it's a case-by-case basis, but you know, this is a guide. This would get you on a good path to having the credit score that you're going to need for the loan. Okay. So you have your credit in good shape, you've saved some money, you're on the job, and you are ready to go start shopping for a house. The first step you want to do is get pre-qualified. Okay, so a pre-qualification means that you called us up, you called up the lender and said, I'm ready to shop. I want to see how much I'd be qualified for, if I'll be qualified for a loan. So you'll meet with me, we'll talk, you know, in person, over the phone. You can do the application right online. And we're going to fill out the application that asks, where are you working? Where do you do your banking? And I'm going to run your credit. So in most cases, a pre-qualification is going to be a hard credit pull so that I can actually see your credit report and, you know, see the score, guide you, and we can look at the whole picture. With that pre-qualification, we would, you know, run it through our system and see how things look. And hopefully the credit is good. And I can tell you at this time, Mr. Smith, you know, you would most likely qualify for a $400,000 loan. Okay. That's good. To get pre-qualified is good. Most realtors would say, okay, you're in good shape to start looking for a house, but a pre-approval is better. So the difference between a pre-qualification, there we are. So the pre-qualification is an estimate of the loan. It's not a firm commitment that will do the loan. And a pre-approval is that next step. Okay, so after we do the pre-qualification, I'll say, this looks great. Let's collect your documentation. Let me have your W-2s, your pay stubs, your bank statements, and we're going to send that on over to the underwriter, who's going to confirm that what you told Lori, the loan officer, is accurate, that you really did make, you know, $80,000 last year, and you really do have this money in the bank. And once we run that credit and do that pre-approval, it's going to be good for 120 days. Okay, so that's going to let you get out there and start shopping for a house. And with that being said, once you get that pre-approval, you're going to want to go talk to a realtor like Amari and Carol. Okay, and they're going to help you find that dream home. You can see their contact information here. Of course, we're going to get you this information after the presentation. Okay, so with that, Carol and Amari, you want to start talking about finding that house out there? With
Absolutely.
now that the buyer has their pre-approval.
That's right. Thank you, Lori. Yes, absolutely. So on the note of a pre-approval versus a pre-qualification, you'll see later on in our slides that it is paramount that you have a pre-approval. Brokers are definitely looking for it, especially when they're on the listing end. So that's something that you want to get all your documents in a row, because it not only protects you in knowing exactly what you qualify, there's no surprises. So I just wanted to give a little bit of background of List to Sell and what brought us together and why we're really here. I was a real estate attorney for 28 years prior to becoming a real estate broker, and did thousands of transactions. And throughout those transactions, you know, it was so wonderful. The transactions were so gratifying when a buyer was properly prepared. They had their pre-approvals. They felt confident in the price that they offered on the home. They had an agent that had helped them with the comps. They knew what to focus on and not to really worry about it when looking at a home and a home inspection. And those transactions were wonderful. And I would always say, why can't they all be this way? And finally, one day I said, you know what, why don't you do something about it? So I opened up a brokerage where, our heart is in guiding you, holding your hand, protecting you from the inception through the end, so that when you do get to your lawyer and you're sitting with them, you're not being told you could sign, but we really can't go forward because your pre-approval is not solid, or it's expired, or you really don't have an idea if this was an adequate price because you don't really know the neighborhood, you don't know the home, you weren't at the home inspection. So these are the things that we protect and guide you along the way from the beginning. I was fortunate enough to join forces with Amauti here, but we're partnered in the list to sell. And I think that the duo is dynamic because he's coming from a financial end of the real estate. So, Amauti?
So yes, so I've been in the real estate industry now for over 33 years and specializing in the financing aspect. And one of the things like Carol, we saw that we could do better in regards to the real estate industry. And we decided that with our dynamic background, we're able to provide our clients something where it's really hard to find, unfortunately. So we're able to guide them through the entire process. And also we take pride in paying attention to detail. We communicate well, not only with our clients, but also with other parties that are involved. And our negotiation skills, I would say, is top notch. That's one of the things that we actually do take pride in. So we are bilingual, and as Lori mentioned, we can also, Lori will have someone from Suffolk also be able to assist them. If they speak Spanish, we could do the same and just assist them in having a complete understanding of what would be the journey in buying a home.
Okay.
On the next slide.
Maybe.
Hang
No, Lori's
on,
trying.
sorry, there we go.
There we go. Okay, awesome. Thanks, Lori. So we're going to talk about the market today, and the market is, you have two options really in what's happening in the market. You have turnkey, and you have what we considered where you need considerable amount of work done to the house. So turnkey, I'm going to tell you, in today's market is the most popular option. That's where everybody is gearing towards. People want to be able to just put the key in the door, turn it, and they're home. They don't have to worry about any repairs, any upgrades. That's where you're getting most of your competition. That is where you're also getting your multiple offers. And yes, above asking still in this market today, compared to your less competition, where again, you have now considerable amount of work that you want done to the house. The good news is, hey, listen, you have a 30-year mortgage. You have 30 years to do the work that you want to do to your house, and you also are able to do the work the way you want it. So that's the plus side. You do not have as much competition when you are looking at that type of property. I would say the most important thing is that you find a home that suits your needs. Everything else will fall into place. So, the plus side also of buying a house where it does need upgrade is the fact that as you continue to invest in it and do the upgrades that you want to do to the home, you're actually now increasing the equity to the house compared to a turnkey property where you're just really relying on the market, and of course you're paying down the mortgage. So that's another benefit of going for a house that, let's say, needs some upgrades. And of course that is priced less. That's the other aspect, is priced less than the turnkey house as well. So we go to the next slide, Lori. So in looking for a home, you have needs. Oh, it's okay. You have needs versus wants. And this is where we sit with our clients and we say, listen, the housing market right now, as everybody knows, has been all over the news, especially here on Long Island, is inventory is low. Yes, there are more houses coming onto the market, but still inventory is low. So less is more. The less of your list of wants you have, the more houses you have available to go and see. The more you add to your list of wants, well, now you have less houses to see, because again, the inventory is low. So have that discussion and have that plan is, what is it do I really need compared to what I really want? And knowing the fact that your wants is something that once you buy your home, is something you could work on later on.
Okay.
Okay.
So a question that I'm sure you're all asking yourself. So I'm qualified. I now know that I can afford to buy. Is this the right market to buy? Well, there's really never a bad market. And the truth is the market to buy is when you're qualified to buy. And I'll tell you my own personal, I bought in a very high market. I bought in 2004, right before the crash in 2008. I never thought about it, never had a regret. Why? Because I knew that that was the time where I needed to make the move in my life to meet my children's needs. I knew that I was qualified, and that was the important thing. I also knew, and something that I would love to share with all of you, is that real estate is the best investment you can ever make. So as you're wondering whether you should buy or not, every month that you're paying towards your rent, you're not getting a tax deduction for it, and you're not building towards your future. If you look at the slide here, you'll realize that in the last 11 consecutive years, real estate has outdone any other type of investment. So if we compare to stocks, bonds, all 34% in the real estate. So is it the right time? Yes. The sooner you can get in, the better, because you're building towards your future. The great thing about real estate too is you can't live in a bond, but you can live in a house. So many of us think that buying a house is buying a home. It's much more than buying a home. It's actually buying your future investment. So now you get the opportunity to live in the house, and unlike any other investment, you have the ability to deduct what it's costing you to keep that investment. So now you get to deduct up to $10,000 of your real estate taxes off your taxes, and you get to deduct 100% of the mortgage interest that you've paid throughout the year. So there's no other way you'll ever be able to get that with any other investment. And if that wasn't good enough, when you sell your investment and you made money on it, you get to keep the money, because you can save. If you've lived in a home for 2 years and it's your primary residence, a single person gets to save on $250,000 capital gain exemption. And if it's a married couple, it's up to $500,000 exemption on your gain. So to answer your question, should I buy? When should I buy? When you qualify, you buy, because the sooner you get into the market, the better. And on the next slide, you'll see that despite us being in a crazy market, because I have to acknowledge, in 30 years in business, I have never seen a market that has stood so solid. Rates went up, prices stayed steady. It's never been this way. I had never personally seen it. But you know what? It's an indication that your investment is secure. Unlike when I came in and it bottomed out and it took me a while to come back up, we're guaranteed at this market, based on what's being projected, that the market isn't bottoming out. We've pretty much stabilized right here. It's projected that rates will continue to go up about 3% per year from here. This year, being an election year and being a year that everyone is stabilizing, the house prices are only expected to go up about 2% this year. So it's a prime time to come in, and the one thing that Amaury had said, and I think we should touch on, is that housing is limited and there's high demand. People want to come into the market. So as Amaury was saying, reducing our wants versus our needs is key, and also trying to get in sooner than later, okay? The next slide, please.
So we want to share with you a different approach. Of course, we work with sellers with our listings, and we want to share with you some of the things that will help you as buyers be in a better light in the eyes of a seller. So pre-approved versus pre-qualified. Lori touched upon this with regards to pre-qualification and pre-approval. For us, we're communicating with our sellers. Pre-approval is what we desire the most. Because again, we're protecting the interest. When we're the listing agent, we're protecting the interest of our clients. And we want to make sure that everything goes smoothly for our clients. And for you, if you want everything to go smoothly, then you're going to Suffolk and you're getting pre-approved, because we know that all the boxes will be checked. They looked at your income, they looked at your assets, verified your employment, and also your credit has been verified. So that's what we look at. When we get a pre-qualification on an offer, we're communicating to our client that is not as strong as a pre-approval, and that's us doing our job. Now we go to direct lender versus a broker. So again, the great thing about going with Suffolk is the fact that as a credit union, you're going to be offered the lowest possible rates and lowest closing costs that you could find. So when we see a pre-approval from Suffolk, we're elated because of the fact that we know that, again, all the boxes have been checked. We know in every likelihood possible, the transaction is going to go smoothly. Compared to when you're going through a mortgage broker, they are a third party. As a third party, they do not have control over the transaction. They have minimal interaction with the processor, if any, or the underwriter. So again, when we get an offer and we see it's coming from a direct lender, we're communicating to our seller, hey, this is great. Where compared to a mortgage broker, we're saying, well, listen, we could run into some pitfalls here, and this could be actually drawn out for a significant period of time. And then asset verification. With every offer, we want to see a pre-approval that has been dated within 30 days. And the reason for that is, we want to make sure the person is employed still, and also the fact that the money is in their account. If they're putting 5% down, then we want to see the 5% down and also the closing costs, that it's there. So again, when we're looking at offers for our clients, these are the things that we look for. So as buyers, now we're sharing with you, these are the things. If you have these things in line, it's going to put you to the front of the pack, because again, it is a competitive market. It's going to put you in the front of the pack as buyers and help enhance your chances of getting this home. Or if you go to the next, please.
All right. So now we've got you pre-approved. We're all ready to go. And if I asked any of you, how do I find a house? What's the first step? I think most of you would probably say finding a house. It's the last step, guys. So that's really what we do last, because first we're getting ourselves pre-approved, and then we're getting our team on board. We have no business looking for a home until everybody's put together, and you'll see further on as to why that's the case. So who's your team? On your team, you have your lender. I have to applaud all of you for being here. Education is paramount in anything. Secondly, as a real estate attorney, I can tell you that I could always tell which transaction came from a credit union and which did not. I get nothing for saying this. It's just the honest truth. Your rates are always lower and your closing costs are always less. And the processing is phenomenal. Okay, it's in-house processing. It's quick. It's efficient. It's effortless. I can't express how lucky you are to be here. And I would think that everyone, once we're done with the webinar, should definitely take the opportunity to get themselves pre-qualified, pre-approved, so you get an idea where you are if this is something that you're looking to do today or in the near future, okay? So the lender, we're here. Your real estate broker, it would be an honor, a pleasure to work with you. What you want in a real estate agent is somebody that you can trust. They're your eyes, guys. You want somebody that's going to get you the opportunities as fast as they come out onto the market. Highly competitive market. So you want to be prepared, not just when you find the house, but have a sit down with someone, help you understand really what your wants, your needs are. You're going to want to have an idea of what the comparable sales are in the market. It's really difficult to make an offer on a house that you've seen and you go in and you're being told you should offer $5,000 over asking. Unless you have that bond, that relationship, and have had the opportunity to build it, it's difficult. But today's market, the houses are still going over asking. Okay, so that's with the real estate broker. Your attorney. As a former attorney, I'll tell you, you'd like an attorney that's real estate specialized. I, like any other attorney, came into this saying, it's transactional. I fill out a form, we pass it across, and we're done. No, newsflash, it is not that easy. And you also don't want to deal with an attorney that's in court till 3 o'clock every afternoon. It makes very difficult for, the transaction to be quick and efficient. So somebody that's real estate specialized, okay? Your home inspector, also on your team. You want somebody that's licensed and insured. You do not want to use a family member. We all have family in construction, but God forbid the boiler goes, the family member's not putting a new boiler in. So you want to make sure that it's somebody that has licensing, has insurance, and you want to be present. I cannot stress how important that you be there and you yourself with your own eyes see what they're seeing. They explain it to you. As an attorney, I'd look at these forms, and as a broker, I look at the inspections, and sometimes it looks so scary. But in truth, because I was there with my client at these inspections, it's not that big of a deal. It just looks worse on paper. Okay, so licensed, insured, and be present at your inspection. And your last team player, your insurance agent. Once your loan has been approved, you're going to be asked to have 1 year worth of insurance. You can start looking for it prior to while we're in the transaction. Call the company that you have auto insurance on. They can maybe give you a package, better rate, but you do not buy the insurance until your loan has been cleared to close. So that's your team, guys.
And I just want to add in regards to the team, we're talking about the home inspection. So, and this is what I share with my buyers. I said, unless you're buying a brand new construction where basically all the work has been done, you should anticipate things coming up on the inspection. So the question is, and this is where I asked them, I said, well, remember that the seller has been living with the property as is, right? And now they're leaving, and now you're going into this property. Do you prefer to have the seller fix whatever item that you're addressing, unless it's a safety issue? If it's a safety item, then of course it should be repaired. Or do you, as the buyer, do you prefer to do the repair yourself? So that's one of the questions. And again, this is the dialogue that we have with our clients. So if you don't mind going to the next slide, please, Lauren.
The next one.
The next one. All right, so finding available homes. So everyone knows about Trulia and Zillow, but I will say the most accurate is One Key, or MLS, Multiple Listing Service. That provides the most accurate information out there. Yes, you should go to open houses, and whenever they're there, you do get to see who's your competition. The great thing though in going to an open house is that you also can have, like, for example, if you have our card with you, say, oh, by the way, here's a Maury business card, he's our agent, so that way they know that you are represented. So open houses are definitely something that you could definitely go to. And then you could also use a real estate agent in looking for a house. I'll tell you that for us, with our clients, we do go over what is it that you're looking for, where are you looking to buy, what type of house you're looking to buy. And then we put all that information into the multiple listing service. And then we make sure that you get notified first when that house comes into the market. And then going to see that house as quickly as possible is paramount, because again, we have quite a bit of competition. A lot of people are looking to buy. So you want to make sure you get in there as quickly as possible. You could see a for sale by owner house, but just be wary, just because of the fact that you're going to somebody else's house, you don't know them. So you have to be careful on that aspect. And then also referrals, where people say, oh, I know someone who's selling a house. Next slide, please.
Maybe.
That's you.
All right. So I had said a little bit earlier how it's super important that a buyer have an idea of what the process looks like, so that they're aware of, where our next step is. So there's a couple of slides here. I'm just going to briefly go through all of them. It's been said already, it's a lot, don't get confused, don't get overwhelmed. You'll have our emails. You'll definitely be able to email us. No obligation. We're here to help. So, just so now that you're pre-approved, you've gone out, your offer gets accepted. At that point, the seller has, 3 options. They can accept your offer, they can just blatantly refuse it, it's too low, not something I'm going to engage, or they can counter us. And at that point, it's really where we come in with our best and final, we come in with the best price. And that's why I said at the beginning, make sure you trust your agent, somebody that you're confident has got your best interest at heart, because this is really where it comes to play. You're going to have to rely on this individual to have given you enough comps, provided you enough information so that you can quickly, very quickly come in and counter on it. Or, the ideal would be to have first thrown in the highest offer. We wouldn't be here. Next slide, please. Now, this is where and I always said it, this is really where your team comes in, because New York is quick, guys. And you'll hear the horror stories of people will say, oh, they were pressuring me, they were obligating me to move so quickly. No, that is New York. In New York, you will do it in home inspection within 24 to 48 hours of your inspection being approved, and you will be sitting with your lawyer generally within 72 hours of your of the offer being accepted. New York is very quick, and you also want to, so it's because it's a quick market, and it's also in your best interest to be prepared. And why? Because until a seller signs a contract, until it's fully executed by both parties, it's not fully binding. So you could have done your home inspection and somebody comes in and offers $10,000 more on a house. seller's not obligated to honor your offer. It's only until both the parties have signed that you're both bound to this transaction. So that's why we have our team on board, because once that offer gets accepted, the first question out of somebody's mouth is, who's your home inspector? Oh, this is my inspector. I'm scheduling the appointment. And who's your lawyer? This is my lawyer. Send them the contract. See, it's effortless if we've done it right. Next slide, please. And this is where you get to relax. After your offer is accepted, your contract is signed, the bank takes over and your attorney takes over. The bank will go through your documents. They'll get everything in order. They'll order an appraisal. They make sure that everything that you've told them is true and correct. They give you a commitment. While the bank is working on their bank, their lending end of it, your attorney is ordering title. They're making sure there's no judgments, no liens, nothing that affects title, that everything is clear. God willing, it takes about 45 days. So by the time your lender says, hey, congratulations, you're approved, your lawyer says, hey, let's schedule closing. When can you come? And that's pretty much how quickly and effortlessly it goes if we've done it the right way. 24 hours before closing, you'll be going, with your agent. We go through the house, plumbing, heating, electricity has to be working, the roof free of leak. We test the appliances. We make sure that everything is perfect condition. The walkthrough is your final look through. Once we've closed, that's it. So it's super important that, once again, you're working with someone that you can trust. It's going to give you the confidence to know everything that you should be looking at. And then there's closing, which is the next one. Ta-da. Bank says, here's your money. You give it to the seller, and then we're there to turn over the keys.
Yeah, and that's where the fun begins.
Okay.
So that's one of our favorite days is the closing table. And we want to make sure if you have the right partners on board, the closing day will be one of the happiest days of your life. So again, having the right team on board, having Suffolk, and again, it would be an honor if you decide to go with list to sell, and having your attorney and the home inspector, everyone on board and ready. That's going to just help make the whole transaction go a lot smoother. Next slide, please.
That's you.
Okay, back to me. So we heard about shopping for the house. I can't agree more with Carol and Amari. It's so important to have experienced realtors on your side, especially in this market. Okay, but with that being said, finding the right loan. So we're going to take a step back. You've been pre-qualified, you've been pre-approved, you found the house, and now you want to talk to your loan originator and understand all the different products that are out there in the mortgage market. Okay, you want a loan that's right for you. You want to feel comfortable every month when you're writing that check, and it's a big step, and you want to choose wisely. Okay, so you're going to hear some terms when you start this process. Fixed rate, adjustable rate, FHA, conventional. A typical, what I like to, call with my first time home buyers, a normal mortgage is usually thought of as a 30-year fixed rate mortgage. And with the fixed rate mortgage, your interest rate will never change. Every month for the life of the loan, until you pay off the loan, your principal and interest payment will be the same because your rate is never going to change. Okay, with the exception, again, your principal and interest portion of the payment won't change. The escrow portion can and most likely will change. We're going to talk a little bit more about escrow in a couple of slides. So you have peace of mind that your payments will be the same. An adjustable rate loan, on the other hand, an adjustable rate mortgage usually has an initial rate that's lower than the fixed rate. Okay, that lower rate will help you qualify potentially for a higher loan amount because you're qualifying at a rate that's lower than that fixed rate. So, again, especially with the housing prices out there, a lot of buyers are moving towards adjustable rate mortgages. Okay, there's different types of adjustable rate mortgages, 5, 7, 10. That means on an adjustable rate mortgage, the initial rate will be fixed for either 5 years, 7 years, or 10 years. So you can get into the house of your dreams at a lower rate. You're qualifying for a bigger loan amount, and you have peace of mind for at least 5 years that your payment will be the same. By doing this, by taking the adjustable rate, you're saving, you could save substantial money during that fixed rate period because you're paying less in interest during that time than you would during that same period of time on the higher fixed rate loan. Okay, but it's very important to understand these terms. We'll go over these in detail, understand these rate caps and adjustments, how often they would adjust. The loans here at Suffolk, the rates have a 1% adjustment cap. Okay, so let's say you take a 7-year adjustable rate mortgage with an initial rate of 6.75%. We're just using, hypothetical numbers here. You're going to have that rate stay the same for 7 years. After 7 years, every 6 months, that rate can adjust. Each time it can go up 1%. Okay, but we're not going to give you a loan that can go up to 40% over the next 30 years, because the loan is still amortized over 30 years. Okay, so fixed for that intro period, 5, 7, or 10 years, but it's still amortized over 30 years to keep that payment nice and low. Okay, but it's not just going to go up 1% every 6 months. There's going to be a 5% lifetime cap on that interest rate. Okay, so adjustable rates, a lot of information. We would want to sit down and go over that in detail. We want you to understand, how they work in detail. But keep in mind, main difference, fixed rate, keyword fixed, fixed for the length of the loan. I just want to touch upon, again, the loans that we do here at Suffolk Credit Union are conventional mortgages, okay? We have our own 3% down program. So thinking back to, how much money do we need to get into a house? 3% is the minimum down payment. It used to be for, a first-time home buyer, and there's a myth that you need what's called an FHA loan to only put 3% down. No, an FHA loan is a government-backed loan. And, I'm not going to spend too much time on that because we don't offer FHA loans here at Suffolk, but that's okay because, like I said, we do have our own program that, whenever possible, is usually more beneficial to the buyer to go with the conventional loan. Carol and Amari can touch upon that maybe a little bit later as well, why you would want a conventional loan. But the difference is the PMI, which is in a few slides, the PMI on a conventional loan will fall off the loan once you have 20% equity stake in the house. Okay, so again, we're going to talk about PMI in another few slides. So we're going to, again, summarize for you because this is a lot, but you're going to get that pre-qualification, and then you're going to go out with your real estate team. You're going to find your house, you'll have your accepted offer, and then you go to contract of sale where you sign your side of the contract, the seller sign their side of the contract. You'll have that great real estate attorney on your side to represent you through all this. Again, very important to have someone knowledgeable with real estate representing you. So you'll already have technically started your loan application, but now that you've signed that contract, you'll have what we call a live application, and we're gonna, keep the wheels spinning so everything moves along, and order that appraisal. So once you've signed the contract, Suffolk Credit Union is going to order an appraisal of the property. So we're going to send out an appraiser to do that appraisal report. They'll go look at the home, analyze the comparable sales in the area that you're purchasing the home. That's another whole process in itself, the appraisal, but Suffolk and your realtor is going to be there to walk you through that. And your attorney at that point is going to order the title report. And like Carol touched upon, that title report is going to make sure that you take ownership of that house free and clean, free and clear, that there's no liens on it, that you're not inheriting someone's, mortgage or judgments. And while all that is going on, Suffolk simultaneously is working on that commitment letter. So you'll have been approved for the mortgage, and we'll issue that commitment letter to you saying, once the appraisal is in, once the title is clean, we're going to give you this money to go to closing. You'll be approved for the loan. So, sometimes there's a few items on the commitment letter that the underwriter asks for. We may need to gather an updated pay stub, or you may have a deposit on your bank statement that the underwriter wants to ask you about. We can get into that as well, because all deposits into your bank, we do document. Okay, so with that 3% down payment, we want to see that money is in your bank account. Doesn't mean it all has to come from you. You're allowed to have gift funds. You're allowed to get, grandma can give you a gift of $5,000 to purchase the house. Maybe you got married and you deposited all your wedding checks. Okay, but we just want you to be cognizant that you can't deposit cash without sourcing it. So that 3% down payment is going to come from money you saved, paychecks, deposits that are documented. Gift funds are allowed.
Hey, Lori,
Yes.
It's Rick. It's not the voice in your head. Hi.
Okay, hi, Rick.
One of our attendees did have a question about down payment.
Okay.
Looking for the pros and cons of a 20% down payment, maybe versus a 3% down payment. So you kind of touched on it, but maybe you could summarize that again.
Right. So that's coming up as well. The bigger the down payment, good for you, great job saving that and being able to come to the transaction with it. That means, number one, of course, you're going to have a lower loan amount. So on a $400,000 home, if you have $50,000 saved, that's great, because you can take out a lower loan amount than if you were, you only come to the table with 5%. Okay, so obviously you'll have a lower loan amount, but the important thing is, if you don't put 20% down, you will have a loan that's subject to private mortgage insurance. And we have our PMI slides coming up. I know we keep hinting at it, but PMI is going to be based on the loan amount and the loan to value. So a lower PMI payment with more of a down payment. So it's great if you can put 20% down, because you won't have PMI, and the more down payment you can make, the better, because that PMI portion of your payment is going to be lower. Does that make sense? I hope so. Did you have any other questions, Rick, on down payment?
Let me see, how about this one? At what stage does the home buyer know the closing costs? So I guess the down payment kind of comes into play there.
Right.
And
So
I guess
you'll have a good idea of closing costs when we sit down and talk about the loan, how much you're putting down, and closing costs again is going to come up in another few slides. So these are all good, great leeways into that, because the area that you're purchasing your home is going to come into play with how much you need to bring to closing, because that is going to take into consideration the property taxes on the house. So I'm going to get into that in another couple of slides, but I can always give you an estimate right from the first time that we sit down.
So it looks like in that question is just like the confusion, or just a separation between down payment and the closing costs. And then so when we talk about 3% down and 20% down, but what about the closing costs? So that separation is apparently a concern out there. But
yes, I understand that. So yeah, I think that's coming up in the next slides. You're going to need your down payment plus closing costs, two separate items. And here's where we're getting to that the closing number. But first we have to hit escrow. So escrow, what is escrow? It's a little bit of a challenging concept to digest, okay, because it's going to come into play in two separate areas. Okay, but escrow accounts are accounts used to set aside funds for your property taxes, homeowners insurance, and mortgage insurance. If you are not putting 20% down, we're going to require you set up an escrow account. And you know, there's certain loan products that yes, you do have to have an escrow account. So each month when you make your mortgage payment, you're going to write out one check, or, you know, obviously that's old school writing out a check, but you're going to set up one lump payment to make your, you know, quote unquote mortgage payment. But that's going to include a few things. That's going to include your escrow for taxes, insurance, and PMI if you have PMI on the loan. Okay. The next slide shows how we calculate that escrow, but basically 1/12 of your homeowner's insurance and property taxes is going to be set aside in your escrow account to pay your taxes. So 1/12, you know, how do you figure that? So if your taxes on the house are $12,000, $1,000, 12,000 divided by 12, $1,000 a month is going towards property taxes. So that monthly mortgage payment includes $1,000 for taxes, probably about $200 a month for homeowners insurance. Okay, so that's what we like to talk, that's what we mean when we talk about your monthly escrow. And I kind of like to explain escrow as a savings account. It's a savings account on behalf of the borrower to make sure that the property taxes are there when the county comes looking, you know, for their tax payment, which Suffolk County, May and December, your property taxes are going to be due. So by putting money in each month into escrow through your mortgage payment, no problem. May 1st comes around, your property taxes are going to be paid by the lender. We're going to pay Suffolk County on your behalf. So it's a savings account albeit, a forced savings on your behalf. But we also want to talk about escrow as it relates to the closing. So that's what we mean when we say the initial funding of the escrow account to cover the upcoming payments and provide a reserve for the taxes that we expect to be due close to closing. So really what that means is at closing, besides the money you need for your down payment, you're going to need to come up with at least a 2 to 3 month cushion of property taxes, plus the taxes that are going to be coming due in the next few months. I like to over prepare my first time home buyers and say that you want to have at least 8 to 9 months of property taxes that you're counting on needing to come up with at closing. So here's where that money needed to close can really start to, add up, because not only do you need your down payment, you need to have escrow for taxes and the actual closing costs. So if we were sitting down, and when I explain this, I like to say that closing is comprised of A, your down payment, B, your escrows, and C, the true closing costs for the loan, which are any credit union fees, which again, thank you for Carol and Amari alluding to that our fees are very low. And that's one thing that sets us apart, and what I try and explain to our borrowers, that when you go out and start shopping for a loan, you'll see that the actual credit union charges are very competitive and much lower, than some of the commercial banks out there. But aside from the bank fees, your attorney and realtor, can let you know that, yeah, there's going to be New York State mortgage insurance, there's title insurance. So those are the true costs. Okay, so you're going to need to allow money. I don't want to throw numbers around, but on a $400,000 mortgage, your actual closing costs are close to $10,000, and then your escrow, 6 months, 8 months of property taxes. That's where your closing fees can start to reach, that $20,000 range. But there's variables in that. So yes, to the person that asked the question, I encourage you to ask me for a closing cost estimate. That's my job to, let you know, all right, well, if I'm looking for a house that has $8,000 a year taxes, I don't have to allow as much at closing as, a house that's going to have $20,000 a year in taxes. And that all goes into the planning, because then, sure, if I don't need that much at closing, I can put more towards the down payment. And don't worry, every year we're going to do an escrow analysis of that escrow account. So, New York State and banking laws, we're not allowed to hold, more than a certain amount in that account. So we're going to analyze it. If there's too much in there, you can expect a check, a check back after that analysis. Unfortunately, it usually goes the other way, and property taxes go up, homeowners insurance premiums go up. So any amount that was in there is going to get applied to that new recalculation of the tax payment. And going right into another fun topic is that private mortgage insurance. So like we said, great if you can come up with 20% down payment, but don't worry if you can't. Like Carol was saying, what is a good time to buy? If you have 3% down payment, why not go right into, looking at houses, because why pay rent when you can own a home and build equity for yourself so that down the road, you can sell that house at a profit. Money going in your pocket is always going to be better than going into a landlord's pocket. So PMI helps you with that. It is not bad to have PMI on a loan. It's insurance. It's insurance in case you default on the loan. The lender will be able to recoup, their stake in the house. But, we pay car insurance that, allows us to drive a car and own a vehicle. So, it's different, of course, but it's insurance, and it lets you get into the home. And like I said, it is something that once you pay each month in that escrow portion of the monthly mortgage, and you make good payments, you can request the lender, you can call up Suffolk and say, hey, I think the house, I think I have 20% equity. I've been making my payments on time. And if that loan to value is now there, we can remove that. You've shown that you can make your good payments and you reach that equity. And like the attendee asked a few minutes ago, the PMI is going to be based on, as that second bullet shows, to determine the price of PMI, your credit score, your loan amount, and the loan to value. So on that $400,000 home, the PMI payment is going to be less if you can put 15% down as opposed to just putting that 3% down. And again, we can estimate that for you. So come in, have a consultation. Just because you want to find out this information, I'm not just going to run your credit. I'm going to talk to you. We're going to estimate that PMI. We're going to estimate the escrows and give you an idea of what you can afford.
Lori, since you used the word consultation, I'll ask one of the questions from the group.
Sure.
Do I need an appointment for a consultation? How do I schedule one?
So at the end of the presentation, there's going to be a QR code we'll leave up that you can aim your phone at it, and it'll take you to the mortgage page, and you can go right online and request a consultation. You can call up our member service number, 924-8000. It's all posted on our website, and you can schedule time to talk to a loan originator. I think we have my contact information posted somewhere in the presentation, but just give us a call. You can call my cell number, but yes, I do encourage you to make an appointment with me so that you don't come in while I'm with someone else. We do have 10 different branches. So like tomorrow, I have a meeting at 11 o'clock in Islandia. I would hate for you to walk into our, Miller Place branch and want to talk to me and me not be there, and you have to wait or come back. So yes, please reach out to me and make an appointment. I guess that's it.
If you want another one,
yes.
Okay. All goes smooth. How quickly can we close?
Great question. So that's another great reason for choosing Suffolk and working with an experienced realtor. If you have prepared yourself, and if we've met and you've gotten that pre-approval. So the pre-approval, if you came in with your W-2s, bank statements, pay stubs, and we do the loan application, we have our on-site underwriter and processor here. We have an express pre-approval process. So in most cases, we can turn that pre-approval around in 24 hours. Okay, so you could walk out of here 24 hours, sometimes the same day with the pre-approval. Okay, so you have that pre-approval. 24 hours later, you go talk to my friend Amari, you hit the streets, find a house, and you go to contract. Suffolk can close the loan within about 30 days. So, you know, that's record speed. You know, that's when, you know, all the stars align and you sign the contract. The seller and the realtor are available for that appraisal. You know, most realtors are anxious to get in there and get that done. So that usually takes about a week's time. Your attorney simultaneously is ordering the title report, depending on the town, the county records, and all those, you know, factors. Usually the title report can come back in about 2 weeks, I would say. And if it's a clean title, if the appraisal is good, you've gotten your pre-approval, we can close a loan in about 30 days. And again, that's because, you know, we are a credit union. We have everyone, you know, right behind the door there, here in our Medford headquarters, that can process the loan quickly. And unlike those commercial banks, your file's not going to sit, you know, on a desk somewhere waiting for an underwriter to get to it to clear the file for closing.
To piggyback on the time frame, what about location? Upstate New York was asked, can we use Suffolk for upstate New York? And then I'll add to that, like, what about Florida or the Carolinas or something like that?
Absolutely. So we definitely can do mortgages upstate in New York. We can also lend in several different states. You can check the website to see if where you're looking is part of one of the Suffolk states that Suffolk is licensed to lend in. And along with that, you know, I know we're kind of geared towards first-time home buyers today, but maybe you are already thinking about retirement or downsizing. We can do second homes in many different states. So, you know, you get in, have your primary residence, and then you could start thinking about using Suffolk for a second home in the Carolinas and Florida. We have a lot of our members that have their memberships here at Suffolk County, at Suffolk Credit Union, because maybe they were a Suffolk County employee or opened up their membership, you know, as a kid and just always did their banking here, and then relocate. So yes, Suffolk can do mortgages in several states and upstate New York.
Okay, we're on the roll. I'll ask, someone's asking about communicating in Spanish. Do we have a translator at the branch, or with maybe Lista Cell as well? Maybe you can elaborate on that.
I'll talk and then I'll hand it over to you, Amari. But yes, so Suffolk Credit Union does have several employees that are bilingual. They can, so if you wanted to meet at a branch, we could have a live and in-person rep sit with us to translate. If the timing doesn't work out, you know, or we can't be at the branch at the same time, we do have a service. It's called Language Line. So I do a lot of introductory calls with our Spanish-speaking members over the phone with the use of that translator on the line with us. But I know Amari does, he's bilingual, so he can always help us.
Yes, absolutely. I'm more than happy to also meet with the client at your office, Lori, and help with the translation just to make it all easier for everyone. Absolutely.
We appreciate. Thanks, Amari. Rick? There must be a lot of questions out there. You're scrolling and scrolling, right?
Doing good. I'll let you finish up, and maybe we'll get the last one or two at the very end.
Okay. All right. So you want to go out, buy a house. maybe you right on the cusp, you have that 3% saved, but you want a cushion, you want a little help with closing costs. Is there anybody out there that can help me get my down payment and closing costs? And the answer is yes. So Suffolk Credit Union is partnering with the Federal Home Loan Bank to offer first-time home buyer assistance. We have several grants available that that will help you come up with the down payment, and we're giving $19,500 towards your down payment and closing costs. How can I get that? So call me, I'll tell you. But basically, the only requirement is that your income is below a certain cap. And traditionally, that has been capped at a number that is hard for our borrowers here on Long Island to qualify for. Again, just because of those housing prices and our market that's specific to Long Island. But the good news is that they've increased those caps. So, for example, a two-family household in Suffolk County can qualify up to $147,744 income for our one grant. So again, that's a great number. One or two family household, 147,000. But in March, we rolled out a second grant program. It's called the HDP Plus, the Homebuyer Dream Plus program. And we're excited that a two-family income earning household can go all the way up to $200,000 earning, capacity. So that's great news. That opens up just so many more families that can now qualify for the grant. So yes, there are some other eligibility requirements. You have to take a home buyer class, but it's super easy. We partner with the Long Island Housing Partnership, and you can take that right over the phone and online. So contact me about that and open up those memberships at Suffolk Credit Union if you don't already have it, because we also offer a home buyer savings club account. So that's in addition to the savings accounts we offer. If you open up this home buyer club account and earmark it towards your home purchase, and you put $100 in it a month for 12 months, at closing, we're going to credit you towards your closing with $750. And if you can do it and you're starting tonight for that house purchase 2 years down, 2 years down the road, 24 months, we're going to give you $1,250. So, I know on closing costs that are $15,000, $1,000, that's going to help. Every little bit helps, okay? And then we also offer a subsidy. So again, $1,000 on this one towards your closing costs, and that's going to be based on a geographic area where you purchase. So you can contact me and find out if the area you're looking in is part of that zip code subsidy that we can offer you that credit towards. So we're back to the credit. It always comes back to credit. It's so important. It's just so important because, you want to get the best rate. You want to be able to come in and say, I have that 800 credit score, and, I don't want to pay more each month because someone put the wrong thing on my credit report a year ago. So we want to get ahead of that. And you can do that by logging on to annualcreditreport.com. Every consumer is eligible to get a free credit report every year. So you're going to want to do that. Look at the report, see what's being reported about you. You're entitled to that. You want to know that. Okay. In addition to getting the actual credit report, Suffolk is excited to roll out a new feature we have within our online banking. So you open up your online banking app like Thomas E. Friedman here, and you can see what your credit profile looks like. So you can use that score in conjunction with the credit report to have a great idea of where you stand, what you need to do, and how to move forward with getting that best score.
Lori, how do I become a member?
How do you do what?
How do I become a member, and can I apply online since you talked about it?
Absolutely. It's so easy. You just go to suffolkcu.org, and in most cases you can open up your membership right there online. We have a designated team for our online account openings, and in most cases you can open it up right on the spot. Always walk into a branch, call our 924-8000 number, and one of our reps will walk you right through it. And definitely get that account opened for the Homebuyer Club, for the credit tools, and for our financial wellness center. So you could stay up to date on what's going on in the market, what's going to happen with rates, and to have all these tools and resources like the mortgage calculator and articles about the real estate market in your area. And this just shows you what that financial wellness center looks like. And we're at questions. So how do we look, Rick, with questions?
We covered pretty much all of them. Good job, thank you. I guess we do have a moment or two, so I'll look at one last one here. How does a self-employed business owner go about applying for a mortgage, and what additional paperwork is involved?
Okay, great question. So you're going to apply just like any other loan applicant that works a 9-to-5 job. I'm going to take a loan application from you, have a short interview with you to find out exactly how you're paid. Do you cut yourself a paycheck? Do you receive a W-2 from yourself, your business? You know, how do you file tax returns? Do you have a S corporation? Are you a partnership? So we're going to talk, we're going to find out about your business. And then depending on the type of business, we're going to determine what documents you're going to need to give me. So normally 2 years of business tax returns, 2 years personal tax returns, and then we're going to need a few months business bank statements. And normally we're going to want to know how you're doing so far this year. So we usually call that a profit and loss statement. So you'll want to, if you're thinking about looking for a home and applying, you're probably going to want to start talking to your accountant and your financial team to get some of these documents ready. You know, you're going to want to find out, you know, how long, you know, Mr. CPA, is it going to take you to get a P&L ready for my lender so that you can get those queued up. You know, and each situation is different. And another great reason to use Suffolk Credit Union, yes, we do have those standard underwriting guidelines that you hear about in the news. You know, you hear terms like Freddie Mac and Fannie Mae. Those are the two mortgage giants that most lenders are going to be ultimately selling their loan. I think someone just put a consultation through as we're talking. I can't talk yet. We have to wait till tomorrow. But Freddie Mac, Fannie Mae, all the loans kind of have to abide by those standard underwriting guidelines. But using the credit union, another great reason to use us is that, you know, we do have a little leeway with some of those guidelines. So we retain, and I'm really going to go into, you know, details here, but we keep a lot of loans right here at the credit union on our books, so to speak, is the best way I can explain it. So we have the rules, we have to abide by them, but you know, there's a little bit of leeway in some of those rules, and that's how we can kind of help our self-employed borrowers in some cases and work with you to make that loan happen.
I'll give you one last one. This is 8 o'clock on the dot here for you. So out of the 3 credit reporting agencies, what score is used to approve the loan?
That's a great question. So when you get that annualcreditreport.com, you also want to make sure of what bureau, which credit bureaus are reporting up into that. So there's 3 major credit bureaus. We have Equifax, TransUnion, and Experian. We are going to run all 3 credit bureaus. So it's a little bit different when you apply for a mortgage as opposed to, say, you know, a Macy's store card or even an auto loan, because we are pulling all 3 bureaus, and we're going to take your middle credit score. So usually they're all within a couple of numbers of each other, but if you have a 700, a 720, and a 740, we're going to be looking at using that middle score of a 720. So you want them all up there so that we can take a nice, I don't want to say average, but the nice middle score of all 3.
Okay, Laura, you're good. Enough further questions. Good job.
Carol, Amari, did I miss anything on your ends?
Perfectly. Great job.
You did ask one thing, and you said that maybe we can elaborate from the real estate perspective with respect to an FHA loan. And I think that that's super important, because if 2 offers are presented and the loan that's being provided on a commitment is an FHA, you know, we as brokers, you know, have to advise the seller that, listen, this loan is a little bit more complicated in that under the FHA guidelines, there are certain things that a home must have, where that's not the case in a conventional. Handrails on any staircase, it's got 3 or more steps. It's going to be asking for a lot of more repair items than a conventional would. We also let people know that, you know, the processing on an FHA is a lot longer. You know, they're looking more at a 45-day commitment and a 60 to 90-day closing, as opposed to a 30 to 60-day closing. So I just did want to say, you know, you asked me to say it.
Right. Thank you, Carol. And in most cases, if you are a qualified borrower with the, you know, eligibility requirements we talked about tonight, there really isn't any reason to go with an FHA loan, because Suffolk can offer that, you know, 3% down program. You know, so a lot of brokers out there, they may not, I don't want to say that they may not know any better, mortgage brokers, just that, you know, they hear, oh, you know, they don't have much to put down. That must mean they have to go FHA. Well, no, you know, we can do a regular, normal loan.
Yes.
And that's what the realtors like. What else? Anything else, Rick? It's hard. I don't see the questions, so I'm not sure. I don't know how those polls turned out. I in the beginning, I saw them being deployed, but I wasn't able to see the results or show them all to you. So I think they're trying to get me to show you them, and I'm just not able to see the results. Yeah, I'm sorry, but of course, we thank you so much for joining. Any questions for myself or Carolyn Amari, please don't hesitate to reach out. The more knowledge you have at the beginning of the process, the smoother it's going to go. There's no, stupid question. All questions are great questions. Feel free to scan that code. I want to go back, and I don't know if I skipped over the list to sell, because we started going right into their portion. So here's Carol and Amari, list to sell, newyork.com. And then just know suffolkcu.org, and you can find us all here.
Yeah,
So,
Lori, great job. Thank you.
thank
Carol,
you, everyone.
I really appreciate you joining and helping out. Yeah, for all the attendees, thank you for joining us tonight. I do stress that, hey, go on our website. We have a lot of good information, and Lori is a great resource to reach out to. And if you do have questions, or even if it's from you want us to compare something that you have from another company, we'll be glad to look at it with you, and we'll tell you, heck, whether or not we can do a better job, or if you have their deal is better. So we'll be glad to compare anything you have with anyone. We'll help with the process. And yeah, as we said about our membership, it's qualified for people on Long Island, and live, work, worship, do business on Long Island. All it takes is a $5 account, and you have access to all our great resources. But thanks again, and I think we're done.
Thank you.
Well, thank you.
Thank you.
Have a good night now. Take care.
Good night. Thank
Bye.
you.
Bye-bye.